What's up, everybody, and welcome to Value Unlocked, which I suppose nobody's heard of before because this is the first episode of what I'm hoping becomes a consistent, I don't know, what would you call this, Mike? A podcast or it's a show we're going to do? We're going to try to create some video content. This is episode one, I guess. This is our first attempt.
Well, I would call it a podcast with the video option. If people care to see our lovely faces, they can.
Video podcast. Value Unlocked.
Video podcast.
I'm Ryan Grace. He's Mike Martin. Mike, for anybody that's not familiar with you, they should be familiar with you if they're familiar with Tasty Crypto, but quick intro, background, then we'll jump into the show.
Sure. Thanks, Ryan. My name is Mike Martin, Mad Mike 0x. Yeah. I head up the content initiative here at Tasty Crypto. We have several blog posts you can read by myself and other writers that we've hired. And I've also created a Learn Center, which should walk everybody through the intricacies of crypto, DeFi, and the basics of investing in cryptocurrency. So that's what I'm working on. That's my initiative. It's not my dream, but it's what I'm doing right now. My dream is to create a more inclusive ecosystem of content, which we'll get to.
I was going to say, you got to pay the bills and put food on the table somehow. I wish we were all living our dreams, but you got to make ends meet. Mad Mike. Is that like saying crazy Mike? Like, what's the mad? Is that mad like as in crazy?
Yeah, I think it is. An English friend of mine, Zach, who I believe you've met before, gave me that name 10 years ago. It was Mad Mike, Elkie Allen, whom you've met, and a few other names that I can't mention on air. So that was kind of the birth of Mad Mike. And that's how I'm known by a specific cohort of people. And I like it. At first I denied it, but I've since embraced the madness. Why not?
You have to embrace it. It fits you well.
Well,
we got that out of the way. Let's talk crypto. Let's talk markets. What's going on? I've been doing some shows with Tom recently. If you've seen him on Tasty Live, Crypto Conversations, 2 weeks in a row, last couple of weeks. I think today's show was pretty good, but last couple of weeks, Tom, I don't know what's going on, but he's been saying crypto is dead. He's lost all excitement, enthusiasm. I suppose that's supported when you look at daily exchange volume. I mean, when you look at just activity, right, it's on the lows. But let's dig into that a little bit more on today's show. Crypto is dead. Is it? I mean, do you really think crypto is dead? We're kind of in the weeds. We see a lot more than maybe the average person does when you work, at a place like Tasty Crypto. What do you think?
I don't think it's dead. I don't think it's ever going to be dead. I was just reading this morning that 20% of 25 to 34-year-olds own crypto. That's a staggering number for that demographic. And as they get older, that amount of crypto they own is only going to increase. I don't think crypto is not dead. Crypto is in a coma at the moment. And a few things need to happen to waken it up. And it will inevitably happen. We've talked about this before. Crypto is just like any other high beta asset class. Interest rates are sky high. I think we just surpassed 2007 levels on a couple of treasuries this morning, actually. There's no compelling reason to be involved in crypto at this moment when you're getting over 5% at your bank account, which is what I'm getting. So the risk reward just isn't there, but it will turn around just like it has turned around in the past. It's just, there's no way that it's dead. There's simply too much interest. I
tend to agree with you, right? It's asleep or it's in a coma. I mean, trading activity is definitely down. I think, again, like some of the macro headwinds are gonna probably continue to be in the way. But I wanted to just pull up some data if I can get it on my screen. I don't know, I'm having trouble loading it. But like crypto is definitely not dead if you're looking at performance. There's an alternative, risk-free, 5% from the government, and you can do that. So park capital in treasury bills, in money market funds. I'm not quite sure you'd go far out on the risk curve there, on the yield curve, but yeah, you can get a pretty attractive yield, let's say right now, assuming that you don't see inflation continue to increase at these levels. And especially an attractive yield if we start to see growth slow down and rates are maintained at this point. But in terms of crypto dead, and I can't unfortunately pull up the performance right here. Maybe we can get it in a second. But Bitcoin's been one of the best performing assets over the last month, over the last year to date for sure, right? There's a lot of assets that have performed well. You look at tech, you look at kind of the AI narrative, you look at the NASDAQ, those things have done well. But Bitcoin has outperformed. And Bitcoin certainly outperformed when you look at this over a 3-year period. And I'm using Bitcoin as kind of that crypto proxy. So on one hand, yeah, I get it's dead in the sense that there's not a ton of activity right now. People are holding, they're stacking, they're not transacting. But that's created a bit of this illiquid supply. There is that demand pressure on price to the upside. I mean, we're seeing this continue to climb. Doesn't mean that it won't go back down to 20,000 or 25,000. Certainly is possible. But the argument around Bitcoin is dead. I mean, if you've been holding it, you have done pretty well here over the last year, all else equal, and certainly relative to other risk assets. So I think that's the first thing that I would point to is just like performance, number one. But is there anything else that you're seeing, or what else are you kind of excited about that goes against this narrative of Bitcoin's dead?
Well, again, Bitcoin, it seems like, is indeed in a coma, but there's some other facets of blockchain and decentralized finance that are really taking off right now. And I know we spoke about this before, but tokenized treasuries are almost every week, it seems like the volume's hitting a new all-time high, led by various decentralized finance protocols. And I know can we share images on here? I guess we'll have to figure that out.
Yeah, we're learning, but you've got to go to the full screen or share screen and throw that there. We'll get better at this. The show is only going to get better, right? Like right now, I'm in a booth next to the trash can. The trash is being taken out as we speak. You're in the same building. Our lighting is terrible. Audio is terrible. It's only going to get better. That's what's cool about this.
Everything's only going to get better. So what interests me about tokenized asset is not so much for US investors. Tokenized assets, specifically treasuries, give the entire world access to American treasuries, mostly through the forms of ETFs. The protocol will invest in the ETF just like they do with Paxos or different stable coins, and they hold an equivalent amount of ETF for every token that they mint. And I just think that is incredibly secure because the whole world wants access to our debt. And this is a seamless, very liquid way of providing access to that debt. So Bitcoin might be in a coma, but certain aspects of DeFi are just starting to light up. And these are the first time, this is really the first time this has ever been done. So imagine once people start to learn about this technology and the liquidity that's there and the ease at which you can get 5% for anybody in the world can get 5% return by investing in these tokens. I think it's even over 5%. That's incredible.
Yeah, I think to that point, right, that theme has definitely reemerged here. It's back in the spotlight, so to speak. It's been a promise of blockchain technology for a while. We've heard about real world assets. You've heard about, fractional ownership of some Van Gogh painting, and you can invest in it via the blockchain. So all these things going on chain, but you've seen a lot of headlines related to that just even in the last month, right? We know JP Morgan's been doing some things on chain with their own private blockchain for some time now. You've got more and more kind of financial media outlets that are picking up on that. This is about something more than just speculating. This is about, the infrastructure that underpins the financial system and the evolution of how all of that works. Some of the stats that have come out recently are in terms of like the analyst numbers. Some people think that tokenized real world assets could be 10 trillion in size, could be 30 trillion. That's a very bullish case there. But just simply take the 70 trillion in assets that are controlled by open-ended funds and add your percentage to that, right? Like, I think that to some degree, this is inevitable. Doesn't mean it happens overnight, but this is the direction that we're going in the same way that, we went from mutual funds to ETFs. Mutual funds aren't dead. They still exist. There's still lots of money in them, but ETFs have some added benefits. The tokenization of assets increases those benefits beyond, what we have today in terms of the tradability, the transparency, the low fee structure of ETFs. It only improves when you have a tokenized version of that, I suppose. The programmability, the interoperability, all the buzzwords, there's some really interesting things that you can create and that you can ultimately do, when we see it move in that direction. I think it's the same thing, when you look at went from physical stock certificates to digital representations of these, electronic representations of these, to just tokenized versions of that digital representation. It opens the door to a lot of possibilities in theory. But to your point, it's something we're actually seeing grow. When you look at treasuries, there is a hunt for yield, right? So there's going to be demand for that. The space is still tiny though. 118 billion is the total size of tokenized assets. And you think about, how do you play that then? Most of it's on Ethereum. 69 billion of those assets are on Ethereum. What are those assets? They're stable coins. That's the first tokenized financial asset, fiat currency on chain, pegged to the dollar, USDC, USDT. Stable coins make up 97% of that. Commodities, government securities, 3%. So I think keep your eye on government securities growing as a share, on-chain activity, the tokenized asset side of things. And I think it's still super, super early when you consider just the how small this is, but the fact that it's growing pretty rapidly. I mean, that's definitely encouraging.
Yeah. There hasn't really been Malcolm Gladwell's famous tipping point. There hasn't really been that a moment of critical mass or adoption yet for this technology. But I think it's very slowly catching on. I think once people do embrace this technology and they see for tokenized assets, the liquidity it can provide to markets, I think it's going to grow exponentially once it is embraced. And again, I think what's sort of slowing that embrace is just the security in general around the ecosystem, which is improving, but at the same time, there are a lot of questions. It seems like every day there's another problem coming up. And Ryan, how are we doing on security with blockchain technology and all the different level 2s and hacks? Is it getting better from what you've been able to see?
Things are generally improving, but we're not immune to risk, right? I mean, there's a lot of risk still. I think people do not appreciate at times how risky it can be on chain, or crypto still is in these early stages. That shouldn't hopefully deter anybody from participating or being interested in it or building in the space, but you definitely need to be aware of the risks, right? There's risks in just about everything in life. You need to be aware of them. You need to take the appropriate measures to protect yourself against them. And so I think you're seeing, more and more that's being developed in that space to help protect against that. We did a space with Wallet Guard earlier today that I'd encourage everybody listening to check it out. But I also think, like, as important as it is around increased security, risk reduction, transparency, and just protecting yourself on chain, for assets to kind of move to this space where we have this budding ecosystem of tokenized assets, you really need some regulatory harmony. You need some clarity there. We don't have frameworks, right? Hopefully we get those at some point, but you need that. And then you need some standardization, because all of these things can be true, that they're interoperable, that this tokenized asset can be collateral over here and can be used to provide liquidity over here. Tons of use cases on chain, but I think that there needs to be some standards that everybody can adhere to, so that we're all doing the same thing and participating in the same way. And that's how the system itself evolves. Whereas one novel use case adopted by one platform versus a variation of that use case in another platform just isn't going to be what onboards or scales, in my opinion, right? You need some kind of underlying framework that everyone has to adhere to. You need some standards. And on top of that, you need regulatory clarity. But if you get that, to your point, all of a sudden you have a mechanism or vehicle for assets to kind of like become more of a sponge for liquidity, I suppose, if that makes sense, right? Things that are currently illiquid could ultimately be more accessible. They're illiquid because they're not accessible. But if you tokenize that real world asset, in theory, you provide, the potential for more people to access it, and on a global basis too, right? And that doesn't mean that you wouldn't go through KYC, you wouldn't adhere to some standards. But if you do all those things and you have these systems in place, then everybody can participate. That's kind of really, in my view, the decentralized nature of it, or the more so the permissionless nature of it, where we don't have a way to participate. right now. There's no way for me to buy tokenized farmland or tokenized timber,
Yeah.
right? Like I want to be able to buy some wood.
I that's interesting. Tokenized commodities. That's very, I never even thought about that. That's the other cool thing about this is the more your imagination works, the more different applications and use cases you can come up with for this technology. But going back to what you said, I think the unity in the ecosystem is a must. We just don't have that. It's like having 5 different internet browsers on your computer to access 5 different internets. We just need one cohesive way for everything to be interoperable and work together without all these bridges, which have been notorious for hacks over the last year. And a bridge is essentially just a link between the Ethereum blockchain and the Polygon blockchain or whatever. And that's where the risk really rises. I wonder how this is going to evolve, because it will evolve, but I just have no idea what that's going to look like, what blockchain is going to look like in 5 or 10 years, because it's too efficient to be ignored, and there will be changes in it. It's just very interesting to think about what those changes will be to make this system more unified and more secure and more standardized too.
Well, and I think, again, it hinges on has to be safer. It's got to be more secure, right? There need to be improvements that happen there. And you need the regulatory clarity. As boring as that is, it's not fun. But I think once you have a set of rules and people feel comfortable operating within that rule set, you're going to see more participation just naturally. And when you have more participation, you have innovation that occurs, more utility that's derived, and ultimately more value that's created. And so I think, that is coming. It's just slower than we'd like for this to happen, right? We're talking about a monumental kind of shift. We're talking about a paradigm shift here and an evolution of financial systems on a global basis, which have impacts on economies, right? And have implications for governments. It's not going to happen overnight. But in terms of price action, this isn't dead. There's a lot that's encouraging, and there's a few things that are upcoming too that I'm pretty bullish about. Curious to get your thoughts about this as well. But during this period of very low volatility, maybe everybody's asleep. Regardless, you have a few, maybe what you might call fundamental developments, or just things that are happening here are going to happen no matter what, that could be pretty bullish for crypto. And I think the first one is the Bitcoin halving, where the reward for miners is cut in half, right? So what ultimately happens there is the rate of change of the supply issuance, it slows. There's still more Bitcoin being mined. The supply is still expanding, but the rate at which it's expanding is decreasing. And if you have an increase in demand or stable demand in that sort of environment, right, it should be supportive of price. And when we look at this historically, within a year or so, I mean, generally that's a bullish event. So great. That's upcoming, expected to occur in April of 2024 next year. But what's interesting about that is it lines up as well with a potential decision out of the SEC around some of these Bitcoin ETFs. I think that unlocks flows. Now, whether they're approved or not, who knows? But we do know that there's a timeline. There is an end date for when those decisions have to be made. So we will have, some understanding of where we are. And I think anybody that's looked at this or has been close to it recently is pretty bullish on the idea that the SEC is likely to approve all of these Bitcoin ETFs. And if that happens, I think it unlocks a lot of flow that, yeah, you might get a positive price reaction in the moment, or maybe it's a sell the news event. I don't care how price trades around that announcement. Presumably it spikes higher and you have some volatility.
Yeah.
But what really matters is you've now created a path for all of this flow and easy access to this asset. And that will really, really matter in an environment where people believe that the monetary base is expanding, their currency is being devalued or debased, where you have monetary authorities like the Federal Reserve or others on a global basis that are back in the market buying bonds, right? We'll see where we get to with interest rates and what happens on the other side of that. I'm just of the belief that, and I think Japan is a good example here because they've been doing this for decades, but we have no choice given the debt levels and given the situation that we face from a demographic perspective to continue to quote unquote print money. They don't actually print the money in that sense, but we have no choice but to continue to devalue the dollar to increase, the monetary supply. And in that environment, that's very bullish for asset prices, right? It typically has in the past, at least, resulted in asset price inflation. And so you're going to want to be able to protect against that, or at least participate in that, even though the purchasing power of your dollar in theory is declining. And when you have easy access to a vehicle that is finite in its supply and is supposedly a digital version of gold, which has these properties and acts in this way, I think that's huge. People kind of laugh at that 6-figure Bitcoin price, but I don't think that's unrealistic at all. It's hard to anticipate just how much money we likely will print, over the next, let's say, 5 to 10 years, and what these prices could be on a nominal basis. But everything is set up for that to occur. I think, it's, in my opinion, it's a no-brainer to have a small percentage of your portfolio allocated to a digital asset. Maybe it's just simply Bitcoin. And that's, it's a long kind of tangent that I'm on here, but that's ultimately why the ETF matters, because when it's time to buy, all the pipes are hooked up. It's really easy for everybody to buy if they want exposure to that, versus today where, high net worth or family offices, but, wealth managers, it's not extremely easy to get access to Bitcoin. Easier than it has been in the past, but definitely not as easy as an ETF that gives you exposure to spot Bitcoin in the same way that an ETF gives you exposure to gold through GLD would be able to allow you to get that exposure.
I think I did a little study on crypto in relation to the modern portfolio theory and the market portfolio several months ago. And from money managers or investment advisors, whatever's point of view, they don't have conviction in their asset classes. If it does offer uncorrelated returns, then they invest in it. That's the end of the story. As of today, there is no reasonable way for these people to invest in Bitcoin, aside from going through CoinDesk or buying a shitty futures-based ETF, or one of these, another block ETF, which is not directly crypto related. But if this ETF does get approved, which it will, the SEC doesn't want to approve it. The judges, the higher ups keep coming back to the SEC and saying, nope, look at it again, look at it again. So there's only one person.
Seems like we're
really
closer than we have been, for sure.
Yeah. And it's, if you look at how much money is in the country, and here's going to be the catalyst. Here's when money is going to pour into Bitcoin, and I think potentially triple or even quadruple its price over a few months. The price of Bitcoin, that is if in 6 months from now the market's down, say 4% on the year, Bitcoin's up 3% on the year. Yep. If they have a legitimate means of accessing Bitcoin, everybody in the world is going to be putting money into Bitcoin. If nothing other than for some window dressing to say, hey, at least I had some exposure to this. Everyone is going to want exposure to this once that uncorrelate, because it's starting to uncorrelate right now. But over the last year, as you know, it's almost been tracking the NASDAQ. And if I have two asset classes, I have the NASDAQ, which is FDIC insured, and I have Bitcoin, which has a lot of hacking risk, and it's not FDIC insured, and they track the same way. There's no reason to invest in Bitcoin. But if that uncorrelation continues in the same fashion it's been doing, we could see, again, 3 to 4 or 5 times the value of Bitcoin within months, I think, because just that fear of missing out, and people, why don't, investors are saying, hey, why not have exposure to this? Just, even 1% would send Bitcoin to an astronomical level of all US money under management, which is trillions of dollars.
I definitely agree. I think people chase, absolutely. You need to chase in that sense. And I think, you're right? It's such a small asset that even if some of these larger pension funds, bigger money managers allocate a small percentage, can have an impact when we're talking about a $600-700 billion asset class, right? Smaller than some of the companies in the S&P 500. I just question whether or not we've truly decoupled. I get 3-year low correlation to the S&P 500. And we can maybe throw some of this stuff up in post on the show.
Yeah.
But all right, VIX goes to 40.
It's difficult to define an uncorrelated asset because it's not going to be
Right.
perfectly uncorrelated. So at
Well,
what point do you say this is uncorrelated? I
I
don't
mean,
know.
here's what we know happens in risk-off environments, right? You see a bid in the dollar versus other currencies, bid to safety, and we see the VIX spike. We see correlations kind of go to one. Risk assets, get me out of this, get me into just cash, right? It's just a bid for liquidity, in that sense. Do you think there's an environment where, for whatever the reason is, and maybe the reason is what matters, right? Maybe there is a catalyst out there, and we did see signs of this in March with the banking crisis. So maybe
Mhm.
it's a catalyst where this is the lifeboat to the sinking ship. I want to believe that. I just haven't seen anything that tells me that when markets and risk assets puke, Bitcoin somehow holds up. And sure, it's performed well here recently. We've seen some chop. Equities haven't really gone anywhere in the last few months. But do you think that there's an environment where the proverbial shit hits the fan and Bitcoin is just like bid?
I'm generally an optimist, but I'm also a realist in that when we look at the huge spans of time, catastrophes can and will happen, especially when we're talking monetary catastrophes. And in this world we live in, it's becoming increasingly global. We're becoming increasingly tied together. We witnessed that in 2009. It's only become more so since then with the global banking crisis, essentially. So if we do come upon bad times in the future, I think, especially as you mentioned, with the level of debt we have and the rest of the world has for that matter, I don't understand why everybody wouldn't have Bitcoin in their account just as a hedge to the US dollar, just in case that worst case scenario does happen. Because there's no better divisible hedge than Bitcoin. Because, of course, there's gold, but Bitcoin I could use, right? I can use it in many different ways. What can I do with gold? It's a hard commodity. Bitcoin is practical, and it will be even more practical in the future when and if this sort of cataclysmic event does occur. And I think I don't know what's going to happen in the future, but judging from the past, the Great Depression, wasn't we some of us still have grandparents that lived through that. And that something like that could easily happen again, but it could be fueled by debt, in which case the dollar and all fiat currency will be very much devalued and Bitcoin will rise in value. End of story, unless something comes out that's better than Bitcoin.
We seem to be inching closer to that on a daily basis. Short-term rates north of 5%, long-term rates lower, slightly lower, with an inverted curve here. Trillions being added to the deficit. And I tend to think the only way out, in my opinion, is you have to ultimately devalue the currency that debt is based in. And I think that that's going to be something that happens in terms of the currency devaluation. Not just out of the U.S. with the Fed. That's probably the only policy that matters, but everybody else, in terms of global central banks, follows suit. It's all one trade. It's all one global central bank kind of policy mechanism. And I think that you're right. Whether who knows what happens with prices, or what the outcome is there. But if you believe that there's going to be some sort of asset price inflation, or just simply that you're going to have less purchasing power as a result, then maybe you have a little bit of crypto as a hedge. Maybe it does prove to be that kind of inflation hedge that everybody calls it, even though at the same time, then they say, well, inflation went up, CPI went up over the last 3 months, Bitcoin went down. It's not a hedge. To your point, let's look
Yeah.
at this on a 20 to 100 year period, and the only comp you have really is gold there. Going back all the way to the depression, and it has in some sense it's retained its purchasing power in dollar terms. So we'll see what happens. We're running out of time on our show, though. This has been fun. I think it's been a good start. We've got a lot coming. We've got guests that are going to join the show. We're going to have more fun, I think. We'll be
Yeah.
less in the monetary policy and crypto weeds at times. And I want to learn more about Mad Mike Martin, personally. I know we know each other. We've been friends for some time, but I feel like you have some secrets that
We'll
I'd like
get
to crack into.
we'll get intimate on the show.
Okay. Yeah.
I'll reveal things to you I've never revealed to anybody before.
Well, on the next show, we will get intimate. Until then, I've got the standard follow us on Twitter at Tasty Crypto. Subscribe to the YouTube channel here. Hit the like button. Do everything that you can if you'd like to help us promote this. We've got a ton of content that's coming soon, and we will be back shortly. Until then, I'm Ryan Grace.
I'm Mad Mike. Thanks for tuning in.
This is Value Unlocked.